Welcome to Between Two Chairs, Demystifying Commercial Real Estate, the podcast that brings you the latest insights and trends on the South Florida commercial real estate market, with your hosts, Fernando Arencibia Jr. and Jennifer Woolman. In each episode, we dive into the world of commercial real estate and break down complex concepts to make them accessible for everyone. Whether you're a real estate professional, a curious investor, or just interested in the South Florida market in general, Between Two Chairs is the podcast for you. So pull up a chair and join us.
Welcome, everybody, to another episode of Between Two Chairs. My name is Fernando Arencibia Jr., and with me is the very industrious Jennifer Woolman. Jennifer, say hi.
Hi, everybody. We're super excited you joined us today because we have a very exciting guest.
Absolutely. No, this is one of our favorite things is to do these interviews. And today we have someone who has a really deep relationship with Jennifer. And all I do is hear about Natasha and Natasha this and Natasha that. And I just can't wait to dive into this interview. I love it.
I'm a fan. I fangirl. So I apologize. I in advance. But I think you're going to see through the interview why I fangirl with Natasha. So
absolutely.
Natasha Falconi is the founder and president of Falconi Capital, a privately held real estate investment firm focused on acquiring, improving, and operating multifamily properties across South Florida. And she helps investors do the same. So full disclosure, I'm a partner with Natasha in one of her multifamily investments because I don't know multifamily. I don't like dealing with multifamily, but I know I wanted it as part of my portfolio. So Natasha is the perfect person for me to do that with. And do you want to give a little bit of background about yourself and how you got into it?
Of course. First, thank you so much for inviting me. I'm really excited about our conversation today. And as you know, I love talking all things multifamily. So we could talk about how I started. So I started my career as a CPA. I worked for one of the large CPA firms, and I was placed in the real estate tax department. And that's how I even knew that people owned buildings. I had no idea that was a thing back then. Fast forward, I went to work for an owner developer, and mostly each shopping center, some multi, and a variety of different asset classes. And in 2019, I started my own firm where I began investing in multifamily properties in South Florida with a focus on assets that require a little love and the idea of keeping the residents in the community. And so that's what we've been doing in Little Havana, Hialeah, and the North Beach area of Miami Beach, and helping keep those residents in where they live.
I love your approach because you go in, you find something, to your point, that needs love. You go in, you spend a lot of capital making sure that not only is the place prettier and nicer than when you bought it, but you also make it extremely safe. So during hurricanes, there's no tape on windows. You put in impact resistant windows and roofs and everything else so that there's also pride of residency for these for these residents.
The other side of this, or the second part of it, is also helping others that want to get involved in investing and just don't know how. And so being able to create a vehicle where others could invest alongside me is another very exciting thing that I've created, because I have many high, powerful people, ladies, as specifically that are high net earners and are not investing in real estate. So that's like the secondary mission in what I'm doing.
Right. And we actually met at one of Beth Azor's women investment conferences, and Natasha's great at sharing what she knows, mistakes she's learned from her clients that her clients had made before when she was an accountant. So tell us a little bit. You were an accountant, you were chair of a bank, you were a property manager. How all of that experience kind of led you to where you are today? Because a lot of people are like, wow, she's so lucky. She owns all these properties, right? But it's everywhere we end up is because we've been on a journey to get there, right? So tell us about that journey.
I don't know how that saying actually goes, but you only see like the trailer, the last 30 seconds of what's happening and not your trajectory of everything that happened. I started with zero. Like I had no properties, no investments. And what I did really is work hard. What did I do? I had a job out of college, worked through college. I put myself through college. So let's say like everything was work. And I started saving money and bought my first apartment. And then as I started climbing the corporate ladder, I started realizing the importance of investing in real estate because that's the business that I was in. And I was watching the wealth that was being created and I wasn't a part of it. I was a W-2 earner and I didn't know that employees could ask for equity. I didn't know many things that I know today. And so that's why I started the company because I felt, okay, so now I am going to do something for our family. Now, I'm very specific about what I want to do, what I do today. I have my markets. I know what I look at. I know exactly the asset type that I want, but it didn't start that way. And it never does. When I decided that I was going to get into multifamily and you would have called me and say, oh, you're in multifamily. You guys are going to love this. You're in multifamily. Where do you invest? All over South Florida. What were brokers doing? Click. All over South Florida. Like, that's not a box, that's not where you would like that. You can give me some specifics of what you do. And slowly I started realizing how important it was to actually mark or create a place where it is that you want to invest in. You can't be so broad in your plan, if you will, if you're going to be successful. You really have to know your market. And so that's what I started doing. I started speaking with brokers in the markets that I'm in Hialeah, in Little Havana, and started developing relationships and learning what other owners, long-term owners were doing. And then people started to notice that I was interested in investing. And I bought my first deal. And that's how it all started snowballing. And I started buying more opportunities and started seeing more opportunities and was able to secure them.
Before going into your first deal, because we would love to hear the story of your first deal, you obviously you were privy to all these different types of investments in the commercial and residential side of real estate. Why multifamily? I mean, we always say investment in real estate is not a passive activity, right? It is a contact sport. And I think probably the least passive of all is multifamily, right? And so, why multifamily?
Why multifamily? When I was deciding what I wanted to do, real estate was the umbrella. I absolutely was going to do it because I knew that real estate was the path to financial freedom and generational wealth. That's an absolute. I decided to invest in multifamily, specifically in the markets that I'm in, because I lived in many of the buildings. I lived in the buildings that I buy before I renovate them, I should say. So I understand what it means to live in properties where maybe they could be a little nicer, where you want to be proud of where you live, but you're not. And so when I started deciding or figuring out what I wanted to do, that's what called me the most. And when I improve a building and we reposition it and we improve it and we create what we create, which obviously the interior and the exterior, and you see how you affect people's lives, like that's everything to me. And we are making returns. So all of it is happening. So we're improving people's lives and we're making money.
I love that. And
it's win-win.
Yeah, we always speak about how, really it's housing is a universal need. So there is something really impactful that if you have a 6-unit, 10-unit, 20-unit building, you're affecting 20 families, maybe even more than that. And, you really have the ability to positively impact those lives. Tell us a little bit about how you came across your first deal. And if you could give us a little bit about that experience of jumping into your first deal.
Especially because you said originally you didn't know your market. So did you develop your markets when you found your first deal and then expand from there, or you picked a handful of them?
No, I was all over the place. I was everywhere. I was looking all over town, everywhere, you look at the map, anything in Miami-Dade, I was everywhere. And I couldn't figure out what I wanted. But my first opportunity is an 8-unit building in Miami Beach, not a market that I wanted to invest in. And I bought it because I was at an event and a broker sat next to me, and I'm like, I'm looking for properties. Well, I have this great deal, and I'm putting it on the market next week. Do you want to come look at it? And I'm like, well, yeah, I invest all over South Florida. Well, let's go look at it. And so I went to look at it. I said, this is okay. But I decided I don't invest in Miami Beach. There was no logic with this statement that I made. But I told my husband, and he's like, let's go look at it. So we drove over maybe that evening or the following evening. And he's like, why aren't you going to buy that? This is a great property. And I'm like, well, the numbers make sense, but it's Miami Beach. You don't buy. And I'm like, he's like, do it. I'm like, fine, I'll do it. I am very conservative. So I think that if he wouldn't have told me, go make it happen, and pushed me to make it happen, I probably wouldn't have bought my first deal then. So that was our first deal. We still own it. And it's a great way to let your listeners know, take the leap. Surround yourself with people that are going to push you, and take the leap, because that created just the first effect, if you will, of me continuing to buy properties throughout. I eventually narrowed down my focus, but that was the first property.
It's so funny because you started by saying that you were buying and looking everywhere, but not Miami Beach.
Yeah, I don't know. And that made no sense.
So I think that's funny. And I wonder if, to your point about being conservative, there was a little click in there saying, oh my God, this might be getting a little too real. Let me take a step back.
100%. Yes. Like, this is happening. Like, I have this opportunity. The numbers make sense. Why am I saying what? And so absolutely.
Where in Miami Beach was the property? Is it North Beach? Is it
North Beach?
North Beach.
I love North Beach.
Yeah, absolutely. and what was the age of the building? Just out of curiosity.
In the 50s. It's a 1950s vintage.
Two-story garden style.
2-story garden style, 1-1s and 2-1s. Has parking, which is beautiful.
Yeah.
Great little area. Wonderful families. Very family oriented. It's very, very nice.
That is awesome.
And how long have you owned that now? I've
owned that one 5 years.
Can you believe it's been 5 years?
I can't. And then the addition to this story is that my neighbor wanted to sell her building. And I didn't know anything. And I got very lucky that the broker that she chose, I had a relationship with. And I was able to buy that building as well. And that was the last investment we made 2 years ago.
Nice.
So how many units do you have now? How many buildings and how many doors total?
7 buildings, 107 doors.
Awesome. In 5 years.
In 5 years.
Impressive. Good for you.
That is awesome. So tell us a little bit about what you learned about managing your own investment buildings from that first investment, 5 years ago, from this first 8-unit building.
What I've learned is that, so the first thing is you make sure that the numbers make sense, on paper, conservatively. Don't try to make the numbers work. but that's standard. Then once you go into the asset on the management side, as you're asking, one of the most important things is showing the residents that you're there to make things better. Because when there's an ownership shift, everybody gets scared. And either they want to move or they think you're going to do something bad. That's their first reaction always. And if you can show them right away that you're going to do good, it really creates an impact on the building. And then your residents want to stay. If you have to raise rents, they usually stay. And that has been my experience. And we come in and we ask them, what are the things that you need? What are the things that haven't been done? What is your wish list? And we immediately start, especially with the exterior of the building. One of the most important things to me is I come in and I guess it's costly, but it makes an incredible impact, is that I immediately change all the windows and doors to impact resistant. It is in every underwriting all the time. It's going to happen if we own a building. Because safety is number one. I don't want my staff to be running around trying to board up windows last minute. I want my residents to be able to sit inside their homes without a problem because they're safe inside of a properly protected opportunity. And we want to focus on other things instead of securing a building that's subpar.
I love that. And plus it probably also helps with your insurance rates.
Yeah, well, yeah. Especially, yes, exactly. Yeah. It helps with all of that and the aesthetics and everything else.
Right. It immediately gives the place an updated look.
For sure.
I love that. And you focus on Class B and C. And I know from the first building you own outright, right?
Yes.
How many buildings did you buy on your own before you started syndicating? Because now you did bigger deals that you syndicate, correct?
Yes, 3 buildings. So I bought one on the beach, one in Hialeah, and one in Little Havana. And then I realized that in order to make a bigger impact, that I needed to spread my funding, and I began syndicating after that. And I still invest in all my deals. I believe that every GP should have skin in the game. So I invest in all of my deals alongside my partners. But I started expanding because of that, because then we can, buy more properties, make an impact, and do good and make good returns.
And one of the reasons I did choose to invest, we get offered stuff all the time, both to buy independently or to LP with. And one of the reasons I invested with Natasha was, one, because she had cut her teeth with her own money. It wasn't like she wanted to start big without the experience. I'm sure she learned a lot. She probably made a lot of mistakes with her first ones and had a lot of pressure points saying, okay, well, I won't do this again, or next time I should do this first, or she got insight. So the fact that she already had buildings and units and that experience under her belt before she went to GP, to me, was very, very important, because that meant to me that she wasn't learning on the investor's dime, right? Not that she doesn't learn, because every deal, as we all know, is totally different. Issues always come up no matter what you plan for. There's always some weird kink in every transaction, but overall super safe, in addition to obviously the fact, that she had an incredible background and skin in the game.
Well, I wanted to ask you, because as you went along and you have, you go from 1 building to 3, and then now you have 7, I'm sure you narrowed down sort of like your thesis as an investor, right? Your approach. And you mentioned 3 areas that I love: North Beach, Hialeah, and Little Havana. So tell me about how you have narrowed down that approach. Are you looking at location first?
Yes.
And, okay, so you're looking at location first. Tell me a little bit about what it is that you see in an area like Little Havana, like Hialeah, and like North Beach, that are common elements that you're looking for in a location.
Well, so I like to say, I'm focused on geography. So, we have a 30-unit building in Hialeah, and there's a 4-plex next to it. I would buy it because I'm looking within 4 square blocks. And I was 4 square blocks in each area, and to attempt to acquire as many assets as possible there. So that's the first criteria. The second criteria, it just depends, because it depends on the vintage of the building. It depends on how the previous landlord has taken care of the property. But I'm not scared of things that have to be improved. I actually like it. I prefer doing it myself because then I know how it's being done.
Absolutely.
And we can do it our way. So that's the other thing. I don't have my major focus is geography. After that, I would buy anything in that particular area that is multifamily. And the numbers make sense.
When you're looking at Little Havana or Hialeah, for example, what attracts you originally to that place? Is it the pool of tenancy, the fact that the availability of the buildings? You obviously have a personal connection to that area. Besides that, what is it that you see there that is impactful for the future growth of this investment?
I believe that B and C properties are always going to exist. Because we need to have, no matter how many companies are coming into Miami and how many A-class buildings are built, we need the working class. So we need the B and C type assets, properties for them. So that is one of the reasons why I like the B and C property. And I believe they're recession proof. When the A can't afford the A, they come to the B. When the D it does well, they come to the B. So we're right in the middle in a place where we can provide not affordable housing in the traditional sense, but affordable places for people to live.
So we've been in kind of a weird market lately. Everybody I know who is an investor has been trying to find deals. In the current market, are you still focused only on those 3 areas, especially at a time when pricing in Miami has increased significantly? Or have you started looking in other markets with similar characteristics to those 3?
I am all in on South Florida. And yes, pricing is high, but the returns are there if they're there. Depending on the deal, there are prices that are high and some of them are not selling. And then there's other things I'm all in on Miami. And I believe that South Florida is a market that prices are going to go up, continue to go up. They're not going to come down. And it's just one of those things that if I don't want to say I would never look in another market, because that would be too much of a commitment per se. But I'm not done in Miami to be able to. I'm just getting started in Miami to start saying that I'm going to go somewhere else. I think there's still plenty of opportunity to be had here.
Talk to us a little bit about, you mentioned earlier about, for example, when you change your windows and doors, you don't want your staff to have to go board up. So tell us about the infrastructure that you built in as far as your team to manage 100 and plus units in South Florida, because I think that's probably a big component of your ability to continue to grow and scale.
Yes. Well, one of the things that I believe is that no matter where you live, you should receive a 5-star service. No matter where you live, your basic needs should be met at a high standard. And so what I've discovered is that us managing that day to day is what makes the difference, which creates for us waiting lists on our properties, which creates a low vacancy factor for us, because people talk and people know that we're the landlords that fix things.
For sure.
And so that's one of the things. So the infrastructure, I have 2 people that help me day to day on the day to day maintenance or requests from the residents, and then I have a person that works with me. That's my right hand person and helps me with all of the phone calls, and that helps me with any situations that we may have with the residents, so that we can handle them properly and quickly. And I also have developed incredible relationships with my contractor and my plumber and my electrician and my AC guy, that all of those professionals are extremely responsive to us as well.
So do you use a text system for your residents? I know those areas and a lot of those areas and probably a lot of the tenants aren't necessarily tech savvy. So do you have, and most of them just like the personal touch on the phone call, like if I lived there, I'd be one of those people. Do you have like a tenant portal, or do they just have a person that they call or a number that they call? How do you manage that?
Yes to all of it. We have a portal that they can, we have, and you're right, the younger generation goes on the portal and then they send what they need. They can text to our phone number, to our office number. They text as well, or they call. So any way is a way to communicate with us.
I love that, because so many companies they say what you say, right? They say that everybody should have 5-star service, but their idea of 5-star service is logging into a portal and putting your name in and writing a request and then waiting for an answer.
Yeah,
so I love the fact that you can have all of those. And I'm not talking necessarily about tenancy, right? I'm talking about anything, your phone company, the electrical company.
Right. Yes. No, we do have it available, and we love that when it happens, especially when it, we tell them, if you're able to log into the portal and it's 10 o'clock at night and it's not an emergency, that way we see it when we get in at 8:30. But if not, they use the system that works for them, that creates the efficiency for the resident.
I love that.
So Natasha, people always say that it's important to invest with the end in sight, and that you really make your money on the purchase. But what is your, do you have an exit strategy? What is your approach in as far as holding period and the longevity of the investment?
I believe that real estate is a long-term play. So I would never want to sell these assets would be the idea. But what's prudent as an investor is that we regularly have to look at it to see what the returns are and whether it should be sold or not. I am a believer that the real estate, especially in the multifamily space, will always continue to increase. So therefore, even if there are dips, it will always, in the long run, be increase with on the equity. And as long as we're making the returns that we, one, promised our investors, and two, believe that are good returns against what's happening in the market, then I don't believe there's a reason to sell short term.
Can you tell us a little bit about the difference? Now we're going into the syndication model, just for people who want to syndicate. I wish I had known about syndication a lot earlier. I think I did my first syndication as an LP when I was in my 30s, but now it's super common. And to make people feel comfortable, the difference between promotes, splits, preferred. I know you've done a lot of things on the importance of the quality of the GP, but can you get a little bit into that process and what it looks like for you as a GP and for somebody investing with you?
So a syndication is, people use fancy words, but it's basically people coming together to buy a property. And it could be, we're going to stick simple. It could be a fund and it could be complicated, but the way we do it is it's people that come together to buy a property. There's one person, which is the general partner, and everyone else typically is the limited partner. And the general partner makes all the decisions, does all the heavy lifting, makes sure the management of the property is getting done. In our case, we handle all of those aspects. We don't outsource any of them. And then the limited partners invest capital alongside the GP of invest capital, and they receive a return. So what happens next? Because the first, and I want to say so that your listeners know, there's a million ways that you can structure a deal. But I do believe simplicity is the easiest. This is just the best way to do it. And one of the ways that we've structured deals is a preferred return for the investors. The investors then get paid back their capital. And once they get their preferred return, their capital is paid back. Then there's a split for the GP and the LP. And it varies per deal, and it varies based on how the market is in a certain time. But that's basically the three waterfall, I don't know if to call it waterfalls, but the three areas and how we do it. So I feel strongly about letting people know that they should consider learning about what I just said a little deeper than this, quick conversation. Because yes, it gives you a little insight to what is a syndication. And because many people believe that in order to invest in a syndication, you need to have millions of dollars. You have to have, so much funds in order to get it done. And you really don't. You just have to find the right person and find the right group to invest with. So I would suggest look at a lot of deals. Look at as an LP, look at a lot of deals, look at opportunities so that you can start learning what the language is, how people structure opportunities, and you could pick your asset class. Why maybe you like obviously I think multifamily is the best asset class in the world, but pick what asset class you like and then start looking to and then invest and get started investing.
You have a great air of confidence when you speak and passion when you're speaking about these investments, especially multifamily and your approach to taking care of your tenants. You've gone through a journey over the last 5 years. Now you have these 7 buildings. You're managing 100 and plus units. Was there any fears that you overcame along the way? I'm sure that there are some people that are listening and they're hearing you and they're like, wow, she just oozes confidence. I wonder if she was ever afraid of jumping with 2 feet into this investment.
That's such a good question. I am always afraid. It's just part of my conservative nature, not wanting to disappoint anyone, being responsible for others' money. But guess what? If I do not go through it, if I do not push through that fear, then I wouldn't be doing anything. And then I couldn't encourage other people to do it as well. Either do what I'm doing or do it passively, whatever it is, but to get involved. So I'm very passionate, but don't think that every time I sign a contract, I'm not scared. Oh, I'm scared. But I also know that I can do it. And I also know that I am not going to stop till we continue to meet this mission that I have.
That's awesome.
I love that. It's okay to be afraid, but push through anyway.
Absolutely. Absolutely.
Yes. And surround yourself with people that are going to push you.
Right.
That are going to text you and say, do this. Have you done this? Do that. That are going to actually encourage you to do more.
I think it's super interesting that you said that the first person who really pushed you was your husband to do the deal, because the same thing happened to me. I looked at deals. I'd been in real estate forever. I knew I wanted to invest in it. We would get great deals. We would put the offer down. And then I always found a reason to back out. Always. Until one day my husband was like, who cares what the market's doing? You've done the numbers. We know the neighborhood. We know the asset class. Yeah. Just do it and offer them more money, because we also would lose deals, because part of me was like, what if I'm overpaying? And we did. We offered more. We got the deal. And a lot of people, to Fernando's point, say you make your money on the buy. So people might be thinking, well, that was dumb. Now she didn't make her money on the buy because she offered more. She could have probably gotten it for less. We never would have gotten in that market if I had continued offering less. And we're in a market that property has tripled in 5 years. So so sometimes, to your point, yes, be afraid, but don't let that fear stop you, and push through anyway, and call a friend, right? That game show, call a friend.
Yes,
that you know is for dollars.
Yeah, that is going to support you in the right way. That's going to look at it and say, wait, what are you doing? Are you being fearful, or is this not really a good deal? And also who you speak to, because everyone has an opinion about what a deal should be worth and whether you should buy it or not. But you really have to listen to yourself and your knowledge and understand. If you understand what you're doing, I would take the risk. Yeah. Take the risk.
You're a mom of 2 boys, so I think commercial real estate and investing in real estate sounds a little bit like parenting. You get a million opinions. Everyone tells you what to do, how to raise the baby, how to go through your pregnancy. Yeah. But at the end of the day, listen to all of it and then trust your gut.
Absolutely. So Natasha, part of our audience are other brokers and agents that are listening on, and that are developing an interest in commercial real estate, or maybe they're already in commercial real estate. And I'm sure that you get pitched deals all the time and you get pitched properties all the time. And I'm wondering, when you have, when someone has a listing and they're presenting it to you, how do you like to get the information about the deal? Because we've had this conversation. There are some people that always like to do these pro forma numbers and, inundate this, expectation of what the rents are going to be, how the expenses are going to be kept low, all these other things. But, I personally think that you're probably one that likes the raw numbers and let me figure it out for myself. But how do you like that, that interaction?
I like it simple. You have a property, you call me, you give me the address, you give me the financials that exist. Sometimes it's, 3 little papers because the property has been owned for 30 years, whatever it is, just tell me what is.
What is.
And I do like it when brokers give you a pro forma of what could be, but with realistic things, because then it makes it faster for me to say yes or no without me putting it into my model.
Got it.
I've looked at enough deals that I know if I want to move forward with something based on a quick pro forma. Here's where we are. Here's where we're going to be. Normalized real estate taxes, normalized insurance, and realistic rental rates. Not what we think is going to happen in 2 years, but what's happening right now. If that's presented, it's fast. I love talking to brokers because I believe, one, you pick up the phone for every broker because you don't know when you're going to find your next deal. And if you have something, and so now if you're saying that you have a lot of brokers that listen, well, hello, all the brokers out there that are listening, send me deals. I'm looking at Hialeah and Little Havana, and we just keep it simple. The simpler, the better. And the more open upfront they are about any issues that are there, the easier it is. Because I have been in situations where I'm super excited about a deal. We see it all the way through. We get to a certain point and something wasn't told and we have to drop the deal. And I don't want to. We don't want to, but at a certain point, and it's only because something wasn't disclosed. So we all do better and faster and more deals if everything is put out there at the beginning. That's
right, because timing of the delivery of that information, don't you find that's probably incredibly important? Because if you knew the issues way in advance and it gave you the opportunity to process it, you might look at it very differently then, and all of a sudden you get this huge surprise when you're almost at getting to the finish line.
Or at the end of your due diligence period.
And you're able to maybe come up with something creative to keep the deal moving forward.
That's right.
I'm very big on that, figuring out ways to make deals work.
Yeah, absolutely. Tell me a little bit about why you continue to be bullish on Miami and on South Florida.
Oh my goodness. First of all, look at all the companies coming into Miami, and we need people to support the people that are coming, the companies that are coming in. Second, Miami's never been bad. South Florida in general, yes, people have opinions, but as far as real estate is concerned, this has always been a fabulous market. And two, I believe very strongly in the areas that I have chosen and the people that live there.
That's phenomenal.
Yeah, I love. We do a lot of work in the areas that you invest in, and we feel the same. And that's how Fernando got started with multifamily as well. Was in Little Havana, so he knows that area super well. So,
but I do like, and I resonate with your story because when we came from Cuba, we went to Venezuela, and then we came here. And when we got here, the first place we lived was a little 2-bedroom apartment that my grandmother had on 12th Avenue and 3rd Street, Southwest. And every time I'm in Little Havana, which is pretty often, whenever I get a chance, I'll drive by the building just because it just creates, it just has amazing memories for me. And I remember the little store down the road where we would go and get the milk, and all those little things are impactful. And then I went to Miami High. So, I've always had, a relationship with that area. And it really is impactful that then you get to come back and actually add value to that area. That makes you feel incredibly good, so.
So tell us a little bit, what's next? What's your vision? Yeah. What are your goals? Do you have a certain number of doors you want to get under or, under your control? Or do you want to do bigger buildings? What does your progression look like?
I would love to do bigger buildings. It's difficult to find in our market, but there's no question. So there's no limit to the number of units I would want to buy. So I am interested in continuing to grow the portfolio. I want to double the portfolio, hopefully, or I plan on it. Hopefully in the next 12 months, things will start to change in a way where we can do that, and continue to speaking to individuals that are interested in investing and having conversations, mostly about just encouraging others to invest as well. Those are like the two main things. So I want to grow the portfolio. I want to get other people investing.
So you just came back from Globe Street. Tell me a little bit about that conference, what it's all about, your experience there. You were actually a speaker. You're getting more and more speaking engagements on the national stage. Tell me a little bit about that.
Yes, it was a wonderful conference. So it's a conference where they bring together, I think there were 300 women there in the real estate world, and some investors, some employees that work in the real estate world, and basically talking about all things real estate, what's happening in the market, different resources that there are. And the panel that I was on was about having women investing in real estate. So it was wonderful. It was a great, investing wasn't the focus of that event, but it was great to connect and see so many women in real estate there. But I will say that we need more women in those rooms investing in real estate, because there were many high-powered individuals there in the real estate world that should be investing as well.
Agreed. And I was just going to pull up, just because you mentioned it, Beth Azor's Women Investing Conference is next year, 2026. Do you know the dates off the top of your head? I think it was like March 24th.
I'm going to find it for you, but I will tell you this. If you're thinking about investing in real estate and you're not sure about how to do it, if you're not sure, you think you're not ready to do it, you must attend Beth's conference. I think
it's March 4th through 6th. Yeah, 5th and 6th, right.
So it's March 4th through 6th, 2026.
In Dania Beach.
And which is right by Fort Lauderdale. So it's very easy to get to. It's a great venue. It is an incredible event that you are going to connect with incredible ladies, women that are investing and that are going to tell you how they did it, women that are not, that want to learn. It's one of the places where it is just, I don't know how she does it, but she gets 200 to 300 women in a room and everyone is kind and giving. That's really what it boils down to.
Mm-hmm. Everybody wants you to succeed, and you find deals and GPs.
Everybody wants you. We're all investing with each other. For me, that I've been to that conference at 5 years, and I've obviously, both of us have. And that second year that I was at that conference changed my life, because it gave me the opportunity to realize that I could do more than just like what you asked me before about buying 3 properties and then what. That is where I realized that I could go bigger. I could do more, and I could have other people investing alongside me so that we can make a bigger impact. And that's where I got the courage to do that.
Yeah, Beth is great at doing that. So I'm going to include all of Natasha's contact information and a link to Falconi Capital on the show notes, as well as to Beth's conference. So you can sign up early. It sells out. There's a bus tour. It's more expensive with the bus tour. Do the bus tour. She shares all sorts of information with you, including a step-by-step plan on how to invest, how to write a partnership agreement, the numbers that made the deal happen. It's amazing. So,
and I have a document that I put together that has like the 5 steps to thinking about if you're thinking about investing in multifamily. So if your audience is on Instagram and they send me a DM to Nat Falconi and send me a DM with like the word invest or just anything, I'll shoot that over to you. And then maybe it'll help you, encourage you to invest in multifamily.
There you go. I love that. All right. Is there anything that you wish we had asked you and didn't, or something that you thought, oh, I'm going to make sure I get this out, but we haven't asked the question that led you there? Anything else you want to share?
I loved everything that you asked me, specifically the question about fear. And I will say that what I wish to impart mostly is, if you haven't started investing in real estate, start. Keep doing what you love. Keep your job, your job or your whatever it is that you're doing as your career, but invest in real estate, because that is how you create generational wealth.
I love that. And you don't have to have $1 million and buy the building yourself to get started. And there's a group of people, there's such a giving group of people. Everyone says real estate is so competitive, and it is, because there's limited number of assets and a lot of people chasing deals, but it's super giving, super sharing. I have found the people like Natasha.
There are enough deals for all of us.
Exactly.
We can all do good.
Exactly. The abundant mindset. So that's people who are thinking, there's not enough, or I can't do it.
That's right.
Follow Natasha on Instagram. She has great social media Instagram. She's also super dedicated. She works out at 4:30 in the morning. So if you're one of these people who can't sleep at night, you can watch her
oh, that's very good.
Doing her workout. So she's super dedicated. She's a wonderful person and super giving. And I am so grateful to be a partner with you. I'm looking forward to another deal with you. And thank you so much for joining us.
Thank you so much, guys. This was great. This was a lot of fun, and I appreciate you. Thank you.
We are so thrilled that you got to join us. Thank you, Natasha, so much. And thank you, everybody, for listening to another episode of Between Two Chairs. We really appreciate your support and your feedback. And I know that you're going to get a lot out of this episode. So for Jennifer and I, we just want to wish you a great day. God bless you all. And until next time, then just do it.